Today in the grain market, soybeans were up. That big start overnight fizzled out somewhat. I mean, we were up 42 cents at one point, but wasn't able to hold. We ended up just like 6 cents today. I think what happened was we had just got done filling that 17-cent gap that we had from last week, and then created another one this morning. It was about a 12-cent gap when the market opened and really rallied. It was very, very strong. At one point, we were really up $1.36 from in just the 4 sessions from last Wednesday. Now it was a very strong rebound, but there's a couple of things like in play right now. Money managers did reduce all their long, not all, but much of their long position in soybeans and in corn. There's some issues around the world too that kind of came into play and put a little bit of a lid on the market and started to weigh on it somewhat. It seemed like that the market tried to come back and backfill some of that gap that it left. It still left a small one, but but not completely. So the market still ended up a little bit stronger right now. The option open interest really added an awful lot on Friday, 6,900 contracts on the call side, which is very big for soybeans. It added to the 2,300 of that went to that $15 strike, which is has 16,000 open interest. That's the highest open interest in November. On the put side, added 1,200 of the puts, mostly to that $14 strike, which has a total of 11,000 open interest. Those are the two highest open interest on the calls and the puts. Sometimes that creates like a little bit of a fence to the market. So that's something that we're going to be watching going forward. The CVOL is at the 32.7% with the oil at 44.7, which is super high for oil. The meal is also up 1.5 at 34.5%. Now the corn did gap up as well. That hot and dry weather, right as pollination is beginning, has some concerns. The traders concerned about the market. Those weather models are expected to stretch out for the next couple of weeks. So we're watching for those high temps and if they are going to do any damage to the crop or just really have some concern, the farmers concerned on what they possibly can produce from there. That gap up also kind of got backfilled as well. But now in the December option open interest, we added 3,000 calls as well as 1,000 puts. That's kind of a lot more than we expected as well. Highest open interest is the $8 calls with 39,000 open interest, and the $6 put, 31,000 open interest. Now we're just a bit above that bottom. That's why we see we've been talking about the market being a little bit oversold here, and this is just technically speaking. So we did get a little bit of a bounce, even though it didn't kind of hold as much as we had hoped. One thing to watch out for, though, the CVOL is up 2% to 49.4%, so getting ever so close to that 50% mark, but that's just an indication that we've got a lot of volatility in that corn. The wheat today was mixed. The global dryness is really underpinning the initial rally as the market really started to take off, but even though it's been hot in Europe, it's been hot in Argentina, in the southwestern plains, as we've seen here in the U.S., but I think that the fact that the economic downturn in Europe really started to weigh on the market, and we had a range of almost 80 cents today, very big a technical turnaround kind of when the market opened higher and coming back. Now we did have some additions to the option open interest, 2,700 on the call side, not really much on the puts. That's something to just be watching going forward, especially everyone trying to get juxtaposition before the report tomorrow. The CVOL was up 2.5% to 53.9%. So wheat is well above that 50% mark. So I said the crop ratings now are going to be, reports going to be coming after the close, and tomorrow the USDA WASDE report, that's certainly going to give us a little more direction in the market. That comes up at 11 o'clock Central Time.